And welcome. This is Mary Ellen McGonagle with your weekly Edge show for Friday, September 8th. First up, as always, we're going to take a look at the broader markets and see where did we close. It was a generally weak period for the markets. You'll want to be aware of key support and potential upside resistance if we can get that momentum back. And also some of the headline news that drove price action last week. Pretty quiet on the economic front, but there was other activity out there. Also, viewer question of the week. And this question is all about ways to build your watch list, waiting for those markets to turn positive again. So first up, let's take a look at some of that news last week. We did see Treasury yields increase, with the yield on that 10-year bond now at 4.3%. I'll share a view of that with you and also highlight the fact that that is generally negative for the broader market. So we did see weakness relative to that rise in interest rates. We did see crude oil prices. They traded above $90 per barrel at one point. We closed just below that, but very elevated oil prices were certainly helping the energy sector to outperform. The group was up almost 2% for the week. We did see jobless claims fall. Now that's just a weekly number, but it was certainly not constructive. We're in a period where the Federal Reserve wants this jobs data to present weakness so that we can see inflation fall further. Last week, 5 separate Federal Reserve presidents did speak at different events last week, and for the most part, their comments were in no way alarming, but there was a general sense that we certainly are not quite done with the rate hike campaign, and next week we will have very relevant core PPI and CPI data next week, and that's very important inflation data that certainly we anticipate will really move the markets next week, depending on whether they present inflation that is decreasing or not. So let's go ahead and take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500. A couple of noteworthy items here. The broader index did close below this key 50-day simple moving average. We also have a relative strength RSI indicator now in negative territory, and really more of a meandering market toward the end of the week, but we are seeing general momentum flatten out here as the markets really try and get their arms around this potential interest rate policy shift. And also you do want to be aware of upside resistance here at this 4,600 level. That's a key area. And then 4,300, if we see further weakness, we will want the markets to hold support there. The stochastics, a faster moving momentum indicator, still up here in positive territory. If it does certainly close below that 50, that would be negative. So mixed on the momentum indicators. However, we are now below this key 50-day simple moving average, mixed, however, with a cautious tone for the markets. Now from here, I do want to take us to the 11 underlying sectors within the S&P 500, a 2-month daily price chart view. And I've added an RSI, that's a relative strength indicator, sorted these sectors in descending order, and sure enough, up here at the forefront is energy. We talked about that nice uptick in the price of oil, in turn pushing these energy stocks to actually a new high. Let's go ahead and take a look at a monthly chart of the energy sector, and here we are. So certainly very important as it relates to a potential continuation rally in those energy names. Moving along, we can take a look at some of these other sectors. Technology underperformed last week, a lot of that having to do with Apple's sharp decline. Next week, Apple will be announcing their new product lineup. Oftentimes you do see a pullback going into that announcement, but also there was news out of China that they may really disband the use of iPhones in particular areas. So Let's take a look at the XLK sector, and you can see, despite this pullback, that the momentum remains positive. That RSI above 50, likewise with that MACD, but generally flat. We are not in this period, of course, going back into June, and then again that early August rally, a nice confirmed uptrend. So keeping an eye on technology because it has been the clear-cut leader for the markets year to date. Moving along, some other areas of note relative to their price action, and that's going to be the industrial sector. It was down 3%, the worst performer for the week. In turn, it negated this uptrend that did develop last week, and much of the weakness here in the industrials is centered around transportation, airline stocks, rail, trucking, and then also aerospace and defense, with Boeing's weak announcement relative to lower than anticipated aircraft orders. So let's take a look at the momentum here that did shift on that RSI into negative territory, and likewise with the MACD now back in negative territory. Also, another sector that we can take a quick look at here is the financials, and this is another area that also reversed and really burgeoning uptrend here this week with a pullback. Bank stocks were down 5% for the week, and that in turn did, of course, negate this uptrend here in financials. A little mixed here, wobbliness relative to the momentum, but generally flat. So we will keep an eye on this group as well as these other sectors. So from here, I do want to take us over to a view of the underlying broader market ETFs that are really helpful in staying on top of where relative strength or weakness is. Again, that RSI, a 2-month daily price chart view, and let's take a look. Here we have IGV, which is a software ETF, and it's holding in remarkably well despite high interest rates. It's an area that generally will be negatively impacted, but this advance that we are experiencing here is all about the companies underlying within this group that are coming out with really strong numbers, and that's helping to retain this uptrend among the software group. Another area I talked about, interest rates. Here we are with that yield on the 10-year, and it pretty much gave back all of the decline from last week. And again, we are elevated above that 4% level, which is pretty critical for the markets. And then moving along, I talked about technology underperforming, and here we are with the Semiconductor ETF, SOXX. You can see this decline here, the move with the RSI into negative territory, and likewise with the MACD. So in essence, the overall semiconductor industry group is back in a downtrend. And one other area that I did want to share with you, but I don't see it here, so we'll go ahead and take a look at that Brent crude oil pricing, all about a drawdown of inventory in oil inventory in the U.S., and then Saudi Arabia announcing that they are going to continue to keep their production levels lower. So here we are with that sharp uptick here in Brent crude oil, which in turn helped energy hit a new high. Now, from here, I do want to share with you names that are, I would suggest, worthy of being put on your watch list. Certainly HP, this is an energy name, and let's take a look at the recent downtrend reversal last week that shaped up, and the fact that the stock is poised for a nice 1-month base breakout. So here we are, and it actually did execute that breakout momentarily today, but pulled back. Some other metrics to be aware of with this oil drilling stock is the fact that we have that positive momentum, that shift, that RSI above 50 and trending higher. And take note, this MACD black line up through the red just now materializing, and historically that can be quite bullish for the stock, and we got some nice high volume on this right side of the base formation. Another area or some other ways that you can help formulate your watch list is be on the lookout for other companies that are in the process of potentially reversing their downtrend. So I'm going to share with you Microsoft, certainly a well-known name, but we're going to take a look at some of the dynamics that are shaping up here. The stock did pull back during this August period simply due to weak earnings numbers from their cloud computing division. But since then, we've seen the stock level off and now trending upward, potentially forming the right side of a base. We now have that MACD up there in positive territory. If we can see this base advance further up to this 360 level, that would be ideal. And that MACD just entering into positive territory. I would like to see more volume, a more pronounced close back above that 50-day, but certainly a name worthy of your watch list. Another name that we can take a quick look at relative to a potential turnaround is PEN. This is a medical products company that is involved in providing devices for those with diabetes. So let's just take a quick look at the chart. You can see it's had a tough period here over the summer months, but more recently, after coming out of an oversold position here, we can see that the momentum has shifted into positive territory. We have now advanced above that 50-day simple moving average, nice high volume characteristics, and that MACD now entering into positive territory. One other area and way that you can also broaden out your watch list is take a look at stocks that are certainly close to breaking out. We can look at some of the software names. I'll share with you a well-known company here, and that is Oracle. Let's take a look. The stock did advance. This is all about earnings and then subsequent AI-related product announcements. The stock hit a near-term high, pulled back, formed the right side of the base, and we can see it is on the cusp of a base breakout. We do have positive RSI momentum shifted above that 50 and trending upward, and likewise with that MACD. That's it for this week. Everyone have a great weekend, and I'll look for you again next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.